For those of you who don't know me, I'm Nicole from the Food and Agribusiness Network, fan on the Sunshine Coast. We are one of five groups who have been appointed as the Agri-Food Industry Partner Organisation to the federal government's Industry Growth Program. It's always a bit of a mouthful. So we've been working now with the IGP team for about 18 months, delivering a whole suite of activities, programs, and events, including monthly webinars, which this is one of. So for those of you who are an IGP participant, great to meet you. Happy to share some more on what we do post this call. And for other friends who are involved, lovely to see you and thanks for attending. Today, we've got my really great mate, Phil, on the line. I'll let Phil introduce who he is and what he does, other than being a great mate of mine. But Phil's joining us with a couple of hats on as one of the founders of Mandalay,
Yeah, co-founders. Yeah, yeah.
co-founders and innovation architects. But he's also doing a great piece of work at the moment with the team from the Food and Beverage Accelerator, FABA, who we've partnered with over the past couple of years to deliver a series of activity on. So I've asked Phil along today to just give us a bit of a snapshot, I guess, on the investment landscape in 2026. Appreciate that it's probably changing somewhat given everything else is going on in the world, but it's a very timely conversation, I think, for a lot of our IGP participants
Mm,
who are looking to scale, looking for funding, looking for opportunities. So just getting, I guess, a bit of a snapshot, some insights around what the world looks like in terms of investment is why I've asked Phil along. Um, just a bit of housekeeping. Phil, do you want to take questions throughout, or do you want people to put them in the chat? How do you want to?
I happy with any or all.
Cool.
So happy. I think questions throughout work well,
Yeah.
and I might I might struggle to monitor the chat while I'm presenting. So if you
Yeah.
just pick up on what's being said in the chat, and
Yeah.
I, happy to roll with it all. So
Excellent. No, I can do. I'll monitor the chat and do that. This session is being recorded because we had a lot of interest and we always get a lot of people looking at these videos
mm,
after the fact.
mhm.
So if you've got any personal specific questions, we can maybe address those at the end and we can turn the recording off if there's anything sensitive. And we will make this recording available to everyone alongside information on everything else that we're doing at the moment as Cluster Connect.
Mm.
So I should also acknowledge the traditional owners on the land in which we gather. I come to you from the Sunshine Coast, so the land of the Gubbi Gubbi people, and I'd like to pay my respects to elders past, present, and future, and pay my respects to any First Nations people who are attending today. So, enough from me. Phil, mate, honestly, thank you so much for joining us today. I know we have these conversations and we see each other fleetingly at things like a vocab.
Yes,
And one of
yes.
these days, we are actually going to sit down and have a proper cold beverage or two.
Mm,
But I really, really, really appreciate you being here and sharing your insights. Phil is also a massive, massive advocate for ecosystem connections
mm.
and building out the wider ecosystem. And I've seen that in action. So really, really, really thrilled to have you here today, Phil. So thank you.
Thanks, Nicole. Wow.
I'm going to mute myself.
Well, what have I done to deserve such a beautiful introduction? So thank you, thank you, Nicole. Really wonderful to be here. I am going to tell you the only people I can see on my screen right now are Rob, Jackie, Nicole, and myself. Anyone else who's on the call, feel free to turn on your video when you want to, and if possible at all. Also, feel free to interact in the chat. I don't really feel like I want to run this as a theoretical presentation on things. I'd love input from the group. I'd love to make it as relevant as I can for the group. I'll start with a few things just to introduce myself on top of what Nicole's already covered. I do primarily wear, hey Tim, yep, I do primarily wear two hats, one being co-founder and partner at Mandalay. We're an early stage venture fund based in Brisbane, and we're a seed to Series A investor in agri-food technologies for all intents and purposes, and we'll unpack that through the session. We're a venture capital investor, and so we look at from at Mandalay, we look at investing through that particular lens, which is only one tool in the toolkit when you're talking about investment more broadly or funding more broadly. And then the second hat I wear is being the managing director, founder and managing director of Innovation Architects. And we're a specialist advisory and engagement firm focused on innovation strategy in various ways. Can be everything from community engagement, understanding what innovation means in the regions, all the way through to policy, pre-policy and policy work, mostly with Queensland government and with some projects internationally as well. Actually, the work is incredibly varied. I spent the last 2 weeks or so in Indonesia on seaweed farms, understanding the development of the seaweed sector there, and looking at the project itself is for a mapping and a feasibility study on the development of a innovation hub focused on the seaweed sector, working with the Australian government, working with the Indonesian government, and so both at that sort of government and intergovernmental level, as well as getting my boots all muddy on the farms themselves. So that's awesome. If you can build a if you can build a life around being across all of these levels, it's really cool. It does mean that my brain is kind of everywhere. It does mean that my calendar is kind of everywhere as well. But that's, I wouldn't want it any other way. I am also the entrepreneur in residence for one of FABA's programs, so the Food and Beverage Accelerator, hosted at UQ. That program itself, I can talk in a bit more detail throughout the session, but is a 12-week program, also run online. It is focused on early stage F&B startups and businesses, both businesses that would fit more of a product category, so actual beverage and food products, as well as innovations, digital or other, across food processing, food manufacturing, and just kind of the general, the overall F&B space. So there's kind of two tracks to that program. You're either a technology business or a product business, and we try to run the sessions. We have a joint track, and then we have separate tracks for the needs or the specific needs of those businesses. So if you have questions around those, very happy to discuss. I think we have one joint participant. She won't be here today, but Sam from Zest Element was part of our program in the last iteration. I think she's in this program as well, but couldn't make it today. So happy to talk a bit more about all of these things. As we get started, and I'll bring up my deck, and I did want to say, Nicole, I know you asked me to talk about the investment landscape in 2026. I do have a good understanding of what's happening in 2026, but I've also designed the session around what it means to understand what's required from a funding investment perspective for your own context, because I think that's kind of the starting point. And also there is quite a bit of content around investment readiness in its various aspects. So depending on who's on the call and who needs what, we can definitely talk about any of these things. So I'll bring that up now. But as I do, does anyone want to unmute themselves or put any comments in the chat if there is something specific you would like to hear as part of the session, or if you're currently faced with a question around a particular capital issue within your business, or you've opened up a round to raise, or you're applying for a large grant, or whatever it may be. Very happy to sort of take that in as I bring up my deck.
Awesome. Um, I'm always conscious that I'm the one who asks the questions and I need to open it up for others, but I've literally just come off a call with another IGP participant and we were talking through other funding options aside from grants. And we will do another session at some
Mm.
stage on the R&D tax incentive
Okay.
schemes,
Yeah. Yeah.
but
Yeah.
kind of alternative funding models, I guess, is maybe something that we can just briefly touch on. And if
Yeah.
there's kind of wider discussion, it's something that we can absolutely pull together another session on at some stage as well, because it's a big topic to unpack. And I appreciate this is only an hour, but if we could maybe just touch on that briefly, that would be very cool.
No, amazing. And I think, it's not a one session topic either. It's but hopefully we'll cover some of the basics. I don't think you can see my screen actually. I think I started sharing in a different. For some reason, I started sharing here.
I feel inspired to now go outside and have a look at some nighttime skies. So, and just a really random fact that the Sunshine Coast is actually recognized as a dark sky area as well, and dark sky tourism is becoming quite a thing. So, random fact for the day.
I need to figure out how to. Um, it keeps on wanting to present in a different on a different part of my computer. So
Maybe while you're doing that, Phil, I might get if everyone could just drop in the chat line where they're from as
yep,
well,
yep.
just so I can be great to put a name to the face. The Global Ag Invest Conference. Good question, Jackie. I've got some insight on that actually as well, based on some conversations that I had last week with the DPI as well. It'd be interesting to see Phil's comments on that. Maybe we can actually I'll address that now while Phil's kind of
Yep.
doing
Messing
that.
with figuring it
So
out. Yeah.
my conversations last week, Jack, with Global Ag Invest Conference, for those of you who not quite sure what it is, the Global Ag Invest Conference is being held in Brisbane in June. The Queensland government has supported the event organisers to actually come and host said event in Brisbane for the first time. Um, it's very much a first year trialing that, seeing how they go. The conversations that I had with both the organizer and my friends at DPI was that the investors that are coming are very much the big end of town, let's just say. So, and I'm not sure whether this is what you're hearing as well, Phil, but very much the large equity investors who are looking for large scale projects. There is an appetite to widen that out depending on how that goes next year. But they were very clear to kind of set expectations that the audience that is coming as part of the conference is not necessarily the VCs or funding that's suitable for the startup world.
Mm.
I do know that the Queensland government is doing a lot of work in putting together a Queensland investment prospectus. So for any Queensland businesses on this call, and we've certainly tapped quite a few of our Queensland businesses on the shoulder, if you haven't put in an EOI for that, they are looking to do another round, and getting your project onto that is a really valuable
Mm.
activity. I will also say that Oz Agritech are doing a whole series of side events around the week. I've got a call in with Meg Lovegrave tomorrow
Mm-hmm.
to discuss exactly what that is. So I think for the startup end of town and smaller businesses, kind of connecting into the side events through that type of activity might be really valuable. But yeah, the the message that I received loud and clear was that for this year, being the first year, the investors that they're bringing along are very much the large scale
Mm.
equity, private funds type businesses. So hope that addresses that question, Jack.
Yeah,
Yeah.
thanks, Nick. Yeah, I've got a someone I'm mentoring who's keen to be involved, so I'll have a look at their IM and see
Yeah,
what needs to happen.
yeah, excellent. And Phil, I don't know whether you wanted anything to add on that just to answer
No,
that
yeah,
question.
I think it's an interesting one. I think it's I agree with you and your comments. Also, my colleagues, partners at Mandalay Marketing team are quite involved in the forum itself. Don't know all the details, but I think one of the things that's interesting to keep in mind is that we're interfacing with the world of capital at different levels.
Mm,
And so, for example, when you're talking to a VC that is representing or deploying a particular fund, or if you're looking at a particular grants program, that is the level at which you're interfacing. And then above that, there's the whole world of capital that structures itself in and talks all capital allocation across multiple vehicles, new structures, blended capital type arrangements, and so on. That then trickles down to the individual funds and so on that we have access to. So you're actually not always talking to the world of capital directly, if that makes sense. You're talking to the various funds and buckets that are available right now, as opposed to those discussions that are happening in terms of larger end of town allocations in Australia or globally.
mhm,
So I think the global investment is also looking at some of those bigger questions, like how do we actually mobilize capital globally to fund certain types of things, if it's just related to sustainability and other types of transitions and so on, and having those discussions at that level. Yeah, but that's all fine. But I think it's interesting to know. It's interesting to know that when you're talking to an investor, there's that whole other side that they're managing as well, and so that comes with expectations. That comes with requirements. If you're talking specifically about a VC usually has multiple funds, one or multiple funds, and those funds essentially are filled with their what's called limited partners or investors' money, and they deploy on behalf of their investors. And so there's a whole set of requirements on the side of how a VC might deploy that capital, and that you don't really have to worry about, but it's helpful to understand what their expectations are with that money, because at the end of the day, a fund manager is a fund manager, is a custodian of their investors' money, and so their job is to deploy it in a way that aligns with the expectations of their investors, if that's for return on capital in dollar value, or if there's an impact requirement and so on. So good to know, and to know how that is structured for the specific fund that you might be talking to. Just wanted to add one slide to my initial presentation. Like, we've been around for quite a few years now. We've invested everything on the. Actually, I haven't updated this in a long time, but everything on the left side of the equation are businesses that we've directly invested in. There's many more sitting in the Mandalay fund as well. We have 9 companies in the Mandalay portfolio now. And on the right side, you see an example of organizations that we work with on the delivery of innovation programs or strategy development, and so on. So quite a few groups that we do work with. And so it's not about me, it's about you. So you are here, and you are in this session, and there's a reason you are in this session. So as I was saying before, please do let me know if there's specific ideas or questions or needs. But I also just want to take a moment for you to recognize yourself in this space. Like, when you're thinking about funding capital into your business, what do you think that means? What do you think that means in terms of amounts of capitalization required? What do you think it means in terms of the types of funding sources that you require within your business? and the reason I ask this question is because very often we get pitched. Obviously, this is kind of wearing my VC hat, but even in the programs I deliver, I very often get a very linear ask. Like, we're raising $1 million at X valuation from VC to do these things, and I think the reality is not. The reality is much more nuanced than a sort of one funding source, one objective. And especially these days, and what we recognize from our experience is that we very quickly, after the second conversation, get into a discussion around how do we unpack what your actual needs are, and what types of funding sources, capital sources, are going to be most appropriate for these particular aspects of your business. We've spoken about the R&D tax incentive, but let's talk about everything like matched funding for research projects in all kinds of shapes and forms, grants, logically, but there's more traditional sources, such as various types of debt funding. There's inventory funding, so inventory loans available. If you've got purchase orders, you can also probably get a loan from the bank, depending on how long you've been trading and what you can show. And so these things are incredibly important, and maybe a bit of a lost art in our startup space, because we've been so used to saying, oh, we'll just raise everything. And this is maybe a bit biased towards startups and technology startups in particular, but we've gotten used to saying, okay, well, I'm going to get all my capital from one particular source, and I don't think that that's the reality we live in, especially a group like this that is trying to do hard things. Usually there's research involved, usually there's pilots and trials involved, usually there's going to be multiple partnerships that are involved. There might be a larger capital investment that needs to be made if it's a facility, and so on. And so these things realistically are just not going to come from one source, and so we have to start thinking differently about how we raise capital. And I think we're not quite I think the ecosystem is in full flux. I know Nicole and I talk about this quite a bit, is that there's probably not, there's a bit of a missing species in our support ecosystem for companies these days, is that we don't have a lot of people who are very sophisticated at being able to put together more complex funding propositions. And so finding support to do this is actually quite hard. And there are obviously people around that can, and maybe some of these people are on the call as well. So I'd probably go to Rob for advice on certain things. Tim's it's not your first rodeo in raising money either. So there's expertise sitting in the room, but I think it's hard to get it from one person. And what I encourage everyone to do is to look at your capital strategy as sitting alongside, your product development or your technical roadmap, a go-to-market roadmap, and a capital roadmap or a capital strategy. They're all intertwined, but they're actually all quite different. And who are the people who you can bring into this capital strategy piece? They may sit on your board, they may be advisors that you have access to, there may be people on the call here, and in reality, I think it's going to be multiple people. I find it really hard to get advice from one particular source. So I'm actually going to go to this slide here, which is three key categories, I guess, of capital raising instruments, which is largely non-dilutive or dilutive, and some things that sit in between. But on the non-dilutive sides, great. If you have revenue, if you have customers, if you can grow your customers and you can bring in revenue, it's probably still to date the best type of funding into your business. But I've spoken about debt instruments of various sorts, government grants or other grants, philanthropy, impact capital, and on the other side you have most of the private capitals, private equity, traditional so capital raising, so venture capital and the likes, and so the things that sit in that side as well. You would talk about recently you would talk about RDC venture funds, sit on that side, for example, or family offices sit on that side, and so on. And so when you're looking at this spectrum, I think again to the point I was making before is you might actually for your capital requirements in your business, you might actually be dipping into multiple of these, and I think that's not the norm. I think that's not the reality we live in, and the things we see from lived experience, and that wouldn't surprise anyone, is people who also then try to leverage multiple sources in complementary ways, but also use that as a narrative in when they go out raising capital. For example, if you're raising private capital and you have an IGP, pre-approved IGP funding, your grant funding sitting there, that's something we get all the time. Nick, you can tell me where all of that's at, but as in people would come to me and say, well, we would expect that this can come in on that side. Hence, we're raising the balance on the other side. Now, that comes with a level of nuance and conversation and discussion and dialogue, because from a private investor perspective, money's not in the bank until money's in the bank. That's the same for you if you're in your fundraising on your fundraising journey. As long as money hasn't hit the account, it's not there. We understand that we can play with these other funding sources, but we also understand that there's a level of risk associated with them. I'm keen to hear if anyone's been anyone's had experiences around this and wanted to share something that's worked for them or something that they're currently looking at. Nick, you're unmuting yourself.
I am, because I'm going to dob Rob in here.
Oh yeah, well that was going to be my next move. So
sorry, mate.
No, that's all right.
I'd just be keen to understand your thoughts, Rob, on for those of you on the call, Rob, another great mate from Food Connect Foundation. I guess you're kind of I don't want to say you're really in that philanthropic impact capital space as well, and I get the sense that a lot of the businesses that we're working with in IGP and beyond kind of tick quite a few of those social impact boxes, let's just say. So just quick thoughts maybe, Rob, on that aspect.
Well, I mean, apart from agreeing with Phil on the opening your landscape to the to more diverse and blended capital structures depending on your narrative. The thing I've found, because I've just raised $800,000 for a farmer down in Victoria, and we're raising 12 million for another farmer at the moment.
Yeah.
And what we've found really works with, because philanthropists sit on both sides. They both have equity in their corpus, and then they have now it's 6% that they have to put into philanthropic spaces. Is you sort of have the same pitch for both, but you divide the pitch into two bits. One is the impact piece, which really clearly makes that easy for them to understand. This is the impact piece that we need to be covered by the philanthropy. Mm-hmm. And here's the piece we're looking at, whether it's debt or whether it's equity or whether it's some of the other things that Phil's already spoken about. And when you bring in the match stuff, then that sort of just adds a lot more weight to what you're trying to do, particularly if it's pre-approved. I sort of work more on the getting or helping the business really work hard on simply presenting their financials with enough. Because the biggest thing in the social space and the ecological space, farmers, is their financial literacy just isn't at the same level as their ecological and social literacy. And in order to raise the capital, they have to raise the bar on themselves. The money's not going to land until they really get themselves into a space where they're really comfortable with their pitch. They've given themselves 4, 10, whatever the years are that they need to on the swoosh side of things to get to a point where they're stable, and they've moved through the startup, they're into the stand up, and they're, you know, particularly then they're starting to be in the stay up phase.
Yeah.
And you want investors, because it's sort of like, and Phil would know this too, is that the narrative and the sort of the legacy that we hold is these chasms and death valleys and all these sort of things. Is the pitch needs to be put in a way that the impact work that we're doing is an opportunity for them to invest in the right side of history, but to pitch it in really clear financial terms, rather than sort of saying, there's this valley of death that us philanthropists go through from the $2 million to the $20 million phase. That's not the case. Actually, I would argue strongly that small to medium-sized businesses are probably in the box seat, but they just have to get financially literate about how they present those marginal cost curves to demonstrate that, yes, we're going to be really solid. We're going to pay back the dividends or the debt in a way, but you have to look after us because we're not going to put ourselves out on a limb. We're not going to sacrifice ourselves anymore. Social entrepreneurs.
Yeah.
We are going to be really financially robust around this model, and we want you to double down and put your investments towards us. But that's most of the coaching that you would do, Phil, I'd say.
Yeah. Yeah. And yes. And, I would then probably, pick up the phone and, talk to you about some of these things. I think just to add to what you're saying, like for entrepreneurs who are pushing the boundaries, like yourself, if, whatever space it might be in, your food system space, social dimensions of that, like in reality, it's almost a reflection of you doing the hard things that you're not simply investable, by simple heuristics that more traditional investors would use, which is annoying and frustrating, no doubt, Rob, over the years. But people would be looking at what you're doing and saying, "Gosh, this is a hard one for us to get involved in." Your job then become and whilst probably not needing a whole lot of arm twisting to see, gosh, I can see there's a lot of impact potential here, but like, how do I engage with this? Where do I put my money? What am I getting? What am I possibly getting in return? And especially, I think some of the newer organizations I'm seeing that are incredibly impactful, including in our food systems, are trying to put multiple pieces together. We had one of those businesses at Culinary Capital at Evoke Ag as well, called Hopevale Foundation, or commercializing IP coming from Cyro. So there is a research component. There's a First Nations community component to their business. There's the fact that they're putting a new seafood product on the market, and the whole development of a new market, including internationally, so developing all the channels. It's like, gosh, that's a big challenge you're trying to solve as a company, and you're doing all these things. And if I'm looking at that as an investor, I'm like, cool, I think this is amazing, but like, where do I engage? Where do I put my money? Which one of the entities? What's the profile of that entity? And can you give me? And so to the comment I was making before on the sophistication of that capital strategy, that's exactly what I'm talking about. Someone who can interface, who can talk the language of the investor. Rob, to your point, and say, here's an investable part to that whole piece. And I think there's a number of those examples that are well on the way in being able to demonstrate how we can really push the boundaries. Now, I do want to say, on the side of the capital landscape, all of that's moving as well. Like, investors are not necessarily set in their ways and not wanting to change and whatnot. Like, there's many more collaborations happening across the board. There's many more discussions happening. Global Ag Investment is a great opportunity as a forum for investors to come together and say, hey, you know what, the world's changing. How do we put our money together to solve for some of these newer opportunities that are coming our way, where my typical, XYZ fund doesn't, none of the funding requirements are being ticked here, or not enough of them to be able to deploy my money. How do we then do this? How do we restructure ourselves? How do we put a blended capital structure together so that we can invest in certain, in certain things? So these conversations are live, but I think we're in a massive transition when it comes to that. Sorry, maybe this is a bit of a rabbit hole, but it's, I think it's helpful to understand that the world of money is in motion, is in flux, and that people do move. However, can't change things from one day to another. A fund life cycle for a VC fund is something like 15 years, right? So, it's like the moment you've put it out in market, you gotta stick with it for that period of time. You can't change it halfway through, right? So, that's something that we need to be mindful of. Is like when you're pitching various investors, they've put a financial product out in market that they're deploying, and that's being set in stone. And when you're operating under a financial license, you can't go and just change the way you operate halfway through. So that's things to keep in mind. Shall I keep going? Was there another question, or Rob, another comment?
Thank you,
No,
Rob.
just agreeing, Phil. Yeah, just
Yeah,
agreeing
yeah,
wholeheartedly. Yeah.
yeah. Cool. Internal capital, always greater and more important than external capital. Every time you're bringing external capital in, there's always going to be some kind of string attached. Now, if you are seeing that can be, you can obviously leverage that in the best possible way. And if you have, for example, grant programs, and it's a project and it's the perfect project for your company, that's great. But very often, there might be certain things that you need to do as a bit of a concession to be able to bring in that money. And if you're raising from a private investor, you're giving away parts of your equity. And I would like to think, I do get comments from people sometimes like, oh, I'm giving away too much equity. And my question is, how big is the pie you're building? Like it's not necessarily a bad thing if you're building a really large, or creating a really large pie, to give away more of your equity. If you don't have such a strategy, then giving away equity is a big price to pay. So I'm not sure. I'm not gonna cover this, but another way of looking at yourself across across the capital requirements landscape is saying what stage of development or maturity are you at. This doesn't apply neatly to every organization. If you're a textbook startup, you typically can identify where you sit on this journey. If you're a different type of organization, maybe slightly different, but we typically talk about pre-seed and seed. Pre-seed is usually pre-revenue, development of the initial product, prototype, and so on. Seed is usually that first go-to-market stage, which means that you have a product that's in a shape to be shared or to be sold to your first customers. So it's early market entry, and that comes at a cost and and usually there's a capital raising event as part of that. Usually then grow your customers. We call that growth, and then you reach a level of maturity. Some people go further and say growth, scale, expansion. There's a number of terms there, but when you reach a certain level of maturity, that you can go and expand into new markets using an existing product that is well validated, well trotted, a playbook that people understand, and you can go and replicate that across multiple countries and markets. But with that then comes some characteristics and some kind of general rules of thumb. Don't take all of this with a grain of salt, because none of this is kind of like really black and white. But again, it's kind of interesting to understand what an investor. This is maybe with a bit of a VC hat on, what we typically look at in market, in terms of what people are raising, what amounts they're raising, potentially at what valuation they're raising, and what type of investors they might be looking for. The type of investments that I've mentioned here are probably all mostly mostly going to be private investment as opposed to some of the other sources we've spoken about. So I can share these slides as well, Nick, if anyone wanted to go back to this as well, and just interrupt me if you want to go deeper into any of these. But I've mentioned before, pre-seed stage, what that would look like. Angel investors. So angel investor is not it's obviously not a stage of company, but it's a type of investor that you may have raised from or might be looking to raise from. And I think there's different types of angels. So there's angel groups. So you would have come across some of them. They're usually located or like grouped according to region. So you will have like Brisbane Angels, and you have Melbourne Angels, and you have Jackie, bye. All kinds of location specific angels. You have then angel groups that also have some kind of meta structure, like Angel Loop would be managing deal flow for a number of locations across Queensland and New South Wales. The way these angel groups operate is probably more like a VC fund. You would pitch, you would submit a deck or submit your information that would then receive some very light treatment, screening and due diligence, and then those deals are presented to a group of angels that can choose to participate or not in that deal. So that's sort of more methodological approach to looking at a deal, from screening to due diligence to presenting it to either an investment committee or an angel group is more of a structured way of looking at it. An angel investor as a person is actually a high net worth individual that might have some cash to put into a company. In the ag space, we can see this. We can see sort of larger landholders and some of the bigger end of town, farmers who invest their own money. They don't necessarily invest through angel groups, but they're also angel investors or high net worth investors, and they may not have that same level of process. They will probably invest because they like you, to be really frank, and because it's a business that they feel like they understand, because it relates perhaps to their work or to their geography or commodities that they represent. I'll go on to the next thing. So venture capital operates quite similarly. So you will usually have a structured way of pitching to VC. Usually you can find that on their website, which means you submit your information that will go through a stage of screening, that will go probably to a first conversation, second conversation. You will go into a due diligence process, and at some point in time that deal will get presented to an investment committee, after which an investment can be made, and you would be negotiating deal terms throughout that process. Now that can be, if anyone on the call is interested in that, I'm happy to take a separate call to discuss this. These things usually, I would say, it's not uncommon for this whole process to take about 3 months from the moment you're actually in conversation to an investment being made. If you are developing a strategy around raising from venture capital or other private investors, those are things that do take a lot of time. They probably take the better part of a year, to be honest, from going out with a raise to actually having filled your entire raise. So there have been times where that's been quicker, but in this current environment, I would urge you to have plenty of time. Give yourself plenty of time to raise, because one of the issues you can run into is that investors don't love that you have short time frames on your investment, on raising your round, because that essentially means that your bank account's really, really low, and that conversely is why you need money, but also represents a risk. So a lot of most investors are in the business of managing risk, even though even venture capital, which is a high risk asset class, still looks at all of the ways in which they can manage risk and that's usually through founder capability and credibility and and a solid strategy. So a few alternative so and then alternative funding sources. I'm not sure if I may have taken that out. Alternative funding sources. So as we said, it's not as straightforward anymore these days. So I urge everyone on this call to start today on your favorite platform. It can be as easy as a Word document or Notion or Google Docs or whatever you use, and just write down what's on your mind in terms of what you think you can have access to from a funding perspective. If it's grants that are relevant to you, if you don't know them, then that becomes a question you ask yourself. Okay, I don't know which grants might be applicable to what I'm trying to do. Great. Then now my job is to find out, not to apply for all of the grants, but just to find out what might be there and what might be in the future strategically aligned. Because grants have a similar issue to raising capital. They take a long time from the effort you put into applying for one, conceptualizing the projects, bringing partners on board, the actual application process, the assessment process. Some of these things take months as well. So you don't want to necessarily invest in your time and effort in something that's not relevant to you, but you do need to be aware of them. I will share with you a spreadsheet after this. It's an online source of a number of investors you can find online, but also important to start to look at investors that may have new different ways of looking at the world. So Tractor Ventures is a revenue based financing organization that you may want to look at. There are groups like Mad Ventures who have their model is to go to investing part of their investment in you would be an equity investment, and part of it would be a debt source. So they have like sort of a mixed model there, and so you do have to do your research on investors, because they may have different models that could apply to you. But as I was saying before, look at grants, look at an investor list and kind of go through them. The first step you can take is like, what's thematically aligned, what's stage and thematically aligned. So if you go through an entire list and let's say you have 100 investors in Australia, who is actually investing in the space that I'm in, if it's agtech or other, and who's actually investing at the stage that I'm at, pre-seed, seed. Okay, so then now your list is probably narrowed down to maybe 20 out of 100. Then go and research each of them and find out how they invest, if they have potentially different funds through which they invest that have different mandates, if there are different components to them, so such as maybe a debt component that sits alongside an equity component. And you may or may not have or find all these answers online, which is why you maybe knock on someone's door to try to see, hey, I've identified these X amount of investors I think might be relevant to me. Can we have a bit of a chat? Do you know something about them? How do they operate? How do they work? And so on, before you reach out to them. So that's on the grant and on the venture investor side. Then, as I said before, have a look at the various angel groups. I think it's always worthwhile looking at who's working within your region, who's working within your sector, and see how they operate as well. I think the cool thing with angel groups is that they, per definition, are a group of people. So you might actually be able to have a chat with a member of an angel group, which I think is a really good way to look at it. If you can find out who their members are, to perhaps reach out to someone and have a coffee, because what better way to get into someone's deal flow pipeline than being endorsed by a member of that group? So if you find a way to have a coffee with someone, then great, and by all means, go and do that. I'm sure that if you have a level of research happening and research projects that need to happen within your business, I'm sure that there are ways that you are already connected to the various universities and research organizations. Now, the question there is putting them to work. It's like, I want to do these things. This is a project that I have in mind. They're also in the business of trying to leverage money to do more research. So they will understand, no doubt, how, what might be most appropriate to be able to undertake a piece of collaborative research with you, for example. So, you can put that on them. And again, I would say that's a big part of your, if you have a research component to your business, then that would sit in your capital strategy, under your research partners and how they operate and who there and how you can work with them.
Phil, I've just put in the chat.
Amazing.
We've got Faber on the team, and I know you'll talk about the Faber work soon, but Cyro have just also launched a whole heap of Innovate to Grow programs, which is, I think, taking people through exactly that process. So happy to share some more links after this as well, but that's a good conduit into that system.
Yeah, no, that's really amazing. It's actually interesting. I will not get to this as part of this session, but what I will do as an exercise as part of the FABA program is I will write out what I think the scaffold of such a capital strategy document is, and I'll share it with Nick after this as well, because I think it's a shared. It's definitely a shared capability there that we all need to be really good at.
Phil, I was thinking exactly the same thing as well. So we'll chat about this offline. Yeah, it'd be awesome.
Yeah. And I think the final thing I want to share in terms of so this is so if you Google now the Airtree open source VC database and resources, that is probably still the best resource out there in terms of venture investors, and I would say venture plus because there might be people who are impact venture investors and the like. So it's a really good starting point for anyone, and they've done some of the work for you already in terms of sector focus and stage focus and the like. So have a look at that. And I won't touch on equity crowdfunding, crowdsourced funding, but that's another one to definitely have a look at. What I wanted to perhaps finish with is, alongside your capital strategy, it's never too early to start building a data room. So one of the things we do through the FABA Growth Hub program is we work with each of the participants to set up a data room. However early you might be, you might not have a lot of the things that are on this checklist. This is a very high level checklist. But know that if you're in market looking to raise funding from any kind of source, that you will at the very least be asked these types of these questions or these checkboxes, in some kind of way, shape, or form. And I think it's really good. It's not just good for capital raising. It's I think just really good business practice to kind of make sure you have some of your most important business documents in the one place, updated, accessible to, if you're signing a partnership agreement, all the way through the, signing a funding agreement to signing, to getting investment from or go through the due diligence with a VC. It's definitely something that that I would do. And conversely, if you start doing this, it would make it much easier to work with someone like myself or Rob or anyone in the space and say, like, okay, what are we looking at here, and how do we start to build that capital strategy around your business. So we work with our businesses on this. I don't really care what platform you want to use to host your documentation. You can be Google Drive, you can do it in Dropbox, you can do it in a specialist data room platform like Ansarada. But it starts with having the right documents in the right place in a structured way. So that is something that I highly encourage all of you to start doing as well, if not already. I'm going to stop here because I know we're at time. There's obviously so much more that I was hoping to cover, but I'm also happy for Nick to relay any questions, or for anyone on this call to reach out to me directly with any questions they have regarding their particular situation.
Thanks, Phil. I think I was probably a little bit optimistic, thinking we could cover a lot of this in an hour, and realizing this going, it's probably definitely a couple of sessions.
Yeah.
Maybe just quickly, can you just give us some information about the Faber Growth Hub? You had referenced that a couple of times, and for anyone on the call, what it is.
Yeah. No, so it's a 12-week mentor-driven program. Our sessions are online. As I said before, it's focused on early stage F&B startups, be it on the product side or on the tech side. And there's two different tracks for businesses that are more technology businesses versus product businesses. Our applications are open. Thanks, Rob. Our applications are open now and close on the 20th of, what am I going to say? 20th of April.
April. Yeah.
So in a month. So have a look at that. The application form can be found on the UQ Ventures website. So
I'll send a link to everyone for this as well, and some details.
And as a mentor-driven program, you will be working with myself as the entrepreneur in residence. You'll be working with Adelaide as our program manager, Adelaide Coleman, and have access to. So we're essentially there to help with the business strategy, and we complement FABA that has the technical capability within the F&B space, so the knowledge and technical capability. So we then provide access to some of the capabilities that sit within the FABA group. It also connects strongly to some of the offerings that they have. So they have a voucher system. They have matched funding, sort of technical projects they can undertake. They have a new maker space or lab that is opening very soon, that you can use especially if you're a food or beverage product that you can make use of. And then there's also larger collaborative research projects that you can undertake with FABA. Now that doesn't come bundled with the program, but if that is appropriate for your business, we would help navigate that. And obviously, you'd already have one foot into FABA to have the right conversations with the right people to be able to take that step as well. The way we work is we will essentially work through a number of tools, such as a data room, such as understanding what a go-to-market strategy looks like, such as what a capital strategy looks like, and then we bring other specialists in that will help you with things like building your financial model, understanding R&D tax, the R&D tax incentive, understanding how to work with contract manufacturers, and how to manage your channels and channel strategies, and the like. So we'll bring a number of external experts in. The endpoint of the program is a showcase event, and we essentially have a demo day event at which you have an opportunity to pitch. It's not a standard investment pitch. It is kind of it's an overall business pitch and your journey and what you've been able to do over the period of the program, or what you've been able to do over the last 6 to 12 months, and it attracts an audience of researchers, F&B industry, so anything from contract manufacturers to marketing companies to and anything in between, and that's kind of the end of the program. And then we take you into our alumni community, which is one cohort strong now. This is the second cohort, and and if that's something for you, or if you have any questions, you can reach out to me. We will take calls prior to you submitting an application if there are specific questions you have. for us, it's all about building a good cohort and about having a really good fit. Program fit with the companies that are part of it. So we just want to work with you and understand if this is actually going to help or not. We're not there to fill the numbers of a cohort. We're there to help to support businesses in what they need to get done. So that's kind of the overview of the program.
Love that. We are also next month, our monthly webinar is from the team of Faber, talking about the wider program of activity and support that they have as well. So again, I'll send a link through to that
Great.
one, everyone.
Great.
Rob, I love that. You've just given yourself a plug, which is awesome. I'll put Rob's details in the kind of follow-up links as well, and what he does, because you've also just actually you're going to be doing the Southeast Queensland Food Forum in July as well.
Yeah, yeah. And it wasn't a plug. It's just more that there are a lot of businesses who it's just really basic stuff. Like Phil can help raise the capital and get to that more sophisticated side of things. But
Yeah,
the gap that we're seeing, as Phil was saying,
yeah,
is, and I've sort of been forced into it, is people just want to feel empowered about how do you talk about this stuff in a way
yeah,
that makes
yeah.
sense. And then you go to Phil and say, I've got something now, and then Phil can and others can really ramp it up to the next level. But
Yeah.
at the start, it's just bookkeeping,
Yep.
separating out the impact costs from general business costs and
Yep.
working through there, but doing it in a peer way where you're all co-learning off each other, basically.
Yeah.
And I
Yeah.
think what you touched on, though, Rob, is a key thing is really clearly understanding your narrative around what your business USP is, but also then tailoring that to your end finance audience as well. So your kind of comment before about being able to tell a narrative for impact versus telling it for the financial side is really pertinent. Phil, can I just ask you and maybe Rob and actually anyone else on the call, any kind of just general big trends that we're seeing in the investment landscape? I know there's a lot of talk about the flow of money coming into certainly the ag tech sector in Australia. That was a lot of the conversation. Is there any kind of general narrative that you can offer on the investment landscape? And I know it's a really big question, but yeah.
Do you want to take that first, Rob, or?
I'm keen to hear from you first.
Yeah, well, I mean, so I think there are. First of all, I think there's been an explosion of specialist funds. So there are many more people that are investing in specific sectors with sector knowledge, and so it is an exercise on your side to find those, because I think those you'll have the best chances of landing really good investment with investors that understand your space really well. Very often these will be companies that can take a lead role on your round as well, or lead role within the your capital raise, because they know and believe in what you do and are convinced of what's happening, and they can convince other people as well that may not have sector expertise. So I think that's a really big trend. I think the continued investment in everything relating to call it broader sustainability, but with a focus on climate continues to exist. I think there is a good level of, or an increasing level of sophistication as to how people look at making investments in those spaces. So okay, yep. And so being able to articulate for yourself how you play within climate, anything relating to climate, if it's resilience, adaptation, mitigation, what your assumptions are in terms of emissions reductions relating to your particular business. I think is really important, because it's a box that a lot of investors need to tick. Two, there's a lot of specialist investors that are looking at this space and will continue to look at this space, the good and the bad. But I think it's a place where money's available. And then the other trends I would just saying, it was kind of what I was saying before. I think a lot of people realize that, your pure linear, investable propositions, that's something that is changing quite heavily, and so the world of capital is restructuring around that. But I don't think we've seen, other than vehicles now that are offering slightly modified financial products, not VCs that also have a debt, a debt or a credit arm, or that might collaborate with philanthropy. There's VC collaborating with philanthropy. There's RDCs that have their own venture funds that are a mix, that are also strategic investors, and the likes. Like, those are all signals of that changing landscape, and so all of that is in flux. So doing research on what each investor is doing is probably increasingly important now, because it's not that cookie cutter anymore. Everyone invests with a very different set of rules and parameters. So yeah, I think that.
Know your customer, know your audience,
Yeah,
know your capital pathway.
yeah. Rob, add to that, please.
No, you've really summed it up. The research piece is, you were talking before, Phil, about the 15-year time frame. The actuaries have been saying for quite a while now, and now those all the investors, as you're saying, they're becoming really sophisticated about where their money is going to go for the next 20, particularly in agriculture. It's a 20, 40-year, 50-year horizon. So look at the taxonomies that are coming out of the climate bonds. Look at the taxonomies that are coming out of the Australian Sustainable Finance initiatives. Read those, and then start to think about where your business is going to solve their long-term finance solutions. It's sort of like this is the sweet spot at the moment, and the war has only heightened the antenna for investors going, oh, where am I going to put my money that's going to be safe in 15, 20 years time? And ag is sort of sitting in that space. So but do your research and really think about, how do I pitch things? After reading what the actuaries and the taxonomies are all saying. The taxonomies it's really good reading to read some of those climate bonds, resilient bonds. Yeah, taxonomies.
I mean, we just signed a free trade agreement with the
Europe.
EU, so it's kind of like, we're on this call now, and it's like that's happening right now. So think of that I think most of my sessions been focused more on the Australian context, and I think we've been relatively lucky to be shielded to a certain degree from what's happening in the rest of the world, but our supply chains haven't been, and there's lots of things that we might be in this ignorant bliss kind of stage of we feel like we're far away from it all, but that I think those new alliances that are forming will change opportunities for international capital flows as well, but we haven't seen the outcomes of those.
Very true. I am conscious of time.